Okay, boys, let's start our lesson today. So our topic today will be introduction to bookkeeping. Okay, so this is a continuation of what you have learned last year. Okay, on the type of account, classification of account, and so on. Okay, so now first of all, I'd like to introduce to you what is the meaning of bookkeeping. Okay, so as you can see from the name itself, bookkeeping. Okay, so what can you think of it? Okay, what do you think it means? Okay, keeping of book. Okay, so just from the name itself, it can suggest to us that it will be about keeping a set of books. Okay, but what do we record in the books? Okay, so we are going to record transactions in the book. Okay, we are going to record the account, okay, of the business, okay, the transactions. Okay, so transaction, as we have already covered before last year. Okay, transaction are basically the financial activity of a business. Okay, for example, a business day in day out, what do they do? Okay, for example, they buy the goods from supplier, they pay for the rent, they receive money from the customer, they pay for advertising, and then they sell their goods. All this refers to the transaction of a business. Okay, is the financial activity of a business, meaning to sell financial activity, meaning to sell it involve money. Okay, it has a monetary value in it. Okay, so these are some example of transaction. Okay, so let's go back to bookkeeping. So bookkeeping is about keeping the books. Okay, so what kind of books? Okay, it will be accounting books. Okay, so that as we go along, if you take accounting year 9, you will come across the different type of books. Okay, but basically bookkeeping is a process of recording transactions. Okay, accurately according to a certain set of rules. Okay, so for example, we buy and sell the goods. Okay, this is one transaction, so we are going to record this transaction. Okay, for example, for this transaction in the books. Okay, in a set of books. Okay, different set of books. Okay, according to a certain set of rules, and this is called bookkeeping. Okay, so basically bookkeeping, I repeat, is to record transactions according to a certain set of rules. Okay, so the business transaction, we will record it in the books, and this is called bookkeeping. Now, what's the importance or the purpose of bookkeeping? Okay, so number one, enable the owner to know whether his business is making a profit or loss. Okay, as a business, of course, you like to know whether you make a profit or loss, right? So with if you record the transaction in the books, it will enable the owner to find out, okay, whether the business is making a profit or loss. Okay, and then from there, if you know the business is making a loss, then you can maybe try to find out what's causing the loss. Okay, maybe it's because a lack of sales. Okay, maybe then you can improve on advertising and so on. Okay, and if you are making a profit, okay, that's good. Why is it? Is it because of the sales? Okay, and so on. Okay, so or is it because you get the goods at a lower cost from the supplier and so on. Okay, so if you record the transaction, it will enable the owner to know whether the business is making a profit or loss. Okay, okay, so now if you know how the business is doing, then it will be able to provide feedbacks to the owner to make better business decisions. Okay, so for example, if the business is making a loss, okay, so maybe you can find ways to cut the loss. Okay, or maybe cut down on expenses, cut down on expenses and so on. Okay, try to negotiate a lower cost from the supplier and so on. Okay, it can provide feedback to the owner to make better decision. And number 3, because you record the transaction, all these are evidence of the financial activities that have taken place. Okay, they are evidence. Okay, all the transactions that have taken place, you record it in black and white. Okay, now next, account. As I said already, okay, so the business they have transactions. So this transaction we will categorize them into account. Okay, so account is used to record the transactions in the ledger. Okay, ledger is one of the books. Okay, one of the book you will come across this as we go along. So ledger is a book where all the different accounts of a business are kept. Okay, next time as we learn as we go along in year 9, then you can you will learn the different type of ledger, maybe the sales ledger, purchase ledger, and so on. But basically, ledger means there are the books, okay, where the different accounts are kept. Okay, and an account is used to record the transaction. For example, you see this transaction, you say, for example, we pay for rent. Okay, pay for rent by cash. So what account? Then we are going to have a rent account, and if we pay by cash, then we are going to have a cash account. Okay, that's how we record the transaction in the account. Rent account, cash account. Okay, for an example. Now, classification of account. We have briefly gone through this last year. Okay, so just to repeat again, the business transaction normally come under the following categories. Number 1, assets. Number 2, liability. Number 3, owner equity or capital. Number 4, expenses. And number 5, income. Okay. I'm not sure whether you still remember this from what we learned last year. Okay, so without referring, can you tell me, just think to yourself, assets. What's the keyword of assets? We have learned last year, right? So assets, the keyword is owned. Okay, the resources owned by the business. Okay, for example, motor vehicle, office equipment, building. Another word you will come across for building is premises, cash in hand, cash at the bank, stock. Another word will be inventory, and trade receivables. This term we'll go through at the next page. But basically, trade receivables is when you sell the goods to the customer on credit. On credit meaning the customer do not pay you the money yet, okay, and they owe you the money. So trade receivables are credit customer who owe you the money. Okay, when you supply goods to them on credit. We'll go through this later on. Okay, liability. So the keyword is owe. Okay, it's the amount owed by the business to external party. Okay, hutang. So loan, bank loan, you owe the money from the bank overdraft, and trade payables. Bank overdraft is when you have a facility with the bank and you withdraw, and the facility allow you to withdraw more than you have in your account. Okay, after that you have to pay back lah, of course, but it's a facility that allow you to withdraw first more than you have in the account. Okay, of course with the interest. Trade payables, just now we talk about trade receivables. So trade payables are like your this is like your credit customer. Trade receivables are the credit customer, meaning the customer who owe you the money, whereas trade payables are the credit supplier. Credit supplier meaning this supplier, they supply you the goods on credit, meaning you haven't paid them the money. Okay, so you owe them the money. Okay, because they supply to you the goods on credit. Okay, it's the trade payables, or we call the credit suppliers. Owner equity is what the owner invested into the business. Okay, capital. For example, he bring in a sum of money into the business, and that's what we call the capital. Expenses, okay, just like you and me, for example, like parents, we have monthly expenses, like we pay for rent, we pay for the school fees, we pay for the fuel, petrol, and so on. Okay, so all these just the same as the business, okay, they incur expenses in their operations, okay. For example, they pay for the electricity, they pay for the insurance, or maybe they rent their building and then they have to pay the rent, they have to pay the salaries of the workers, okay. So all these other expenses, okay, the money spent in the business operation, okay, you can interpret this as the word perbelanjaan, okay. This one is on, this one is all, and this one is the money spent, okay, perbelanjaan, and this one is the money received, income, pendapatan, okay. You can think of this as pendapatan, okay, you receive, okay, and this one is perbelanjaan, okay. So money received, income, okay. So for example, you sell the goods and you receive the money, okay, so this is your income, okay. Or it can be rent received, okay. For example, you rent the building to people and you collect the rent, okay. These are source of income for the business. If you see the word receive, okay, and sales, they are mostly under income, okay. So now move on to exercise 1, exercise A. I'd like you to have a try at this, okay, by yourself, and then the next lesson we'll go through the answers together, okay. So fill in the blank, okay. For example, this one you have a read first. We'll go through this next lesson. So asset for the business on, liability for the business or, owner equity is the owner investment in the business, expenses is the money spent or the money incurred in the business operation, and income is what the business receive, okay. It's a source of income. So over here I have the number here, meaning you will have to occupy 11 of these, okay. So for example, I'll give you an example. For example, building, okay. So building is an asset. You see over here, asset was the resources owned by the business, okay. Motor vehicle, office equipment, building, okay. So building, building, okay. Example, okay. So you will do the rest and we'll go through the answer next lesson, okay.